dear students, welcome to the second session on the chapter Death of a Partner. Here in this session, I am taking up second question of this chapter. Black, white and brown are partners sharing profits and losses in the ratio of 2:2:1. Their balance sheet as on 31st/12/2002 was as follows. On the asset side of the balance sheet, we find cash at bank, bills receivables, debtors, stock, furniture and buildings. On the liability side, we have creditors and capitals of three partners, black, white and brown. Total of the balance sheet is 1,50,000. Brown died on 30th April 2003 and the partnership deed provides that, first point, the deceased partner will be entitled to share of profit up to the date of death calculated on the basis of previous year's profit. Second point says he will be entitled to his share of goodwill calculated on the basis of 3 years profit of average profit for the past 4 years, and the profits were for 1999 80,000, 2000 50,000, 2001 40,000, 2002 30,000. And the third point says the drawings of the deceased partner up to the date of death amounted to rupees 2,000. The fourth point says interest on capital was to be allowed at 6% on the outstanding balance. The executor of the deceased partner and the remaining partners agreed that rupees 5,400 should be paid to the executor immediately and the balance in 3 yearly installments with 6% per annum interest on the outstanding balance. Show the account of the executor until it is completely paid off. So this is the present question. So let's analyze the question now. So there were three partners, black, white and brown, and their profit sharing ratio was 2:2:1. So first work is to identify among the three partners who has died. So it is given that Brown has died. So Brown is the last partner who is entitled for receiving 1/5 share in the profit. Okay, that is the first thing we need to identify. Then the second thing we need to identify is as on which date the balance sheet is given. It is given on 31st/12/2002. So that becomes the end of previous year. So when the current financial year begins, it begins on 1st January 2003 and it ends on 31st/12/2003. Okay, we have to first identify what is the current financial year, when it begins and when it ends. Okay, and then it is given that Brown died on 30th April 2003. 30th April 2003. So now you have to identify from the beginning of the financial year till the date of death of the partner for how many months he has been there as a partner in the firm. So from 1st January 2003 till 30th April 2003, total number of months are 4. January, February, March and April. April month also you have to include because he died at the end of April. So he was there as a partner for the first 4 months of the current financial year. Okay, the partnership deed, which means the partnership agreement, provides that the first point, the deceased partner will be entitled to his share of profit up to the date of death calculated on the basis of previous year's profit. So now they are speaking about deceased partner's share in the expected profit from the beginning of the financial year till the date of death. So the basis here is to calculate on the basis of previous year's profit. What is the current year here? Current year is 2003. What is the previous year? Previous year is 2002. So we need to identify what is the previous year's profit. Here it is given in the second point that the profit of 2002 is 30,000. So last year's profit is nothing but comprising of 12 months. So 30,000 is the profit for 12 months. So we need to calculate what is 4 months profit. For 12 months the profit is 30,000. For 4 months what is the profit? Cross multiplication we have to do. We will get some amount. So out of which we need to calculate what is the deceased partner's share. Okay, I'll show you the working note relating to that. First working note is calculation of Brown share in the expected profit up to the date of death calculated on the basis of previous year's profit. So we need to first write what is the previous year's profit, that is 2002's profit, which is 30,000. The expected profit of the whole firm for 4 months is, so as we are calculating cross multiplication, for 12 months 30,000, for 4 months how much? So we get the answer as 10,000. Then we are going to calculate what is deceased partner Brown's share in the expected profit of those 4 months. So 10,000 into the share which is belonging to the deceased partner is 1 by 5. So we get the profit of the deceased partner as 2,000. So this is the first point. Okay. Then coming to the second point, he will be entitled to his share of goodwill calculated on the basis of 3 years purchase of average profits of the past 4 years. So what is the formula we are going to use here? Value of goodwill is equal to average profit into number of years of purchase. So here number of years of purchase is nothing but how many times of the average profit should be taken as the value of goodwill of the total firm. So here they have given the profit for 4 years. We need to first calculate average of 4 years. What do we do for that? We are going to calculate the total of 4 years profit divided by 4. We get the average profit. Then multiply it with the number of years of purchase. Here it is given as 3 years purchase. So we will get what is the total goodwill of the firm. Then we are going to calculate what is the deceased partner share. So I will show you the working note relating to goodwill calculation. Calculation of Brown's share of goodwill. Value of goodwill is equal to average profit into number of years of purchase. Average profit is equal to profit of those 4 years divided by 4. We get the average profit of 50,000. Then the value of goodwill of the total firm is equal to average profit into 3 years purchase, which comes to 1,50,000. Thereafter we have to calculate what is Brown's share of goodwill. So 1,50,000 into 1 by 5, which comes to 30,000. In the previous video itself, I have told you what is the adjustment entry we have to pass for adjusting the share of goodwill which belongs to the deceased partner. As I said, here also we are doing the distribution in the gain ratio. So here we need to first identify on the basis of which case we are going to calculate the gain ratio. Here also they have given only one information, that is the profit sharing ratio among the partners is 2:2:1. Okay. Here it is given in the question that the profit sharing ratio is 2:2:1. No other informations are given. So here we need to calculate the gain ratio on the basis of case 2. Okay, which means that gain ratio is equal to new profit sharing ratio between the remaining partner. So now among black, white and brown, Brown had died. So he has died now. Who are the remaining partners and what is their share of profit? Black and white are the remaining partners and their share of profit is 2:2, which can be further simplified as 1:1. So new profit sharing ratio as well as gain ratio between black and white is going to be 1:1. So in that particular ratio, we are going to adjust the share of goodwill which belongs to the deceased partner Brown. So the entry here is remaining partners capital account data to deceased partners capital account. Who are the remaining partners? Black's capital account data 30,000 into 1 by 2. White's capital account data 30,000 into 1 by 2. To Brown's capital account 30,000. Okay. So this is the adjustment which is relating to goodwill. Then the third point given as the drawings of the deceased partner up to the date of death amounted to 2,000. So till the date of death, the deceased partner has withdrawn 2,000 from the firm. Okay. So that should be debited to the deceased partner's capital account. Then the fourth point says interest on capital was to be allowed at 6% on the outstanding balance. So here we need to first find out what is the outstanding capital balance of Brown, the deceased partner. It is 20,000 that will be given in the balance sheet. Then we need to calculate here the interest on capital from the beginning of the financial year till the date of death. So for how many months we need to calculate? Only for January, February, March and April. And the rate of interest here given as 6% per annum. So I see how to calculate the interest on capital. The amount of capital outstanding as on the date of death is 20,000 into 6% per annum into 4 divided by 12, because we are calculating the interest on capital only for 4 months. Okay, we get the interest on capital as 400 rupees. Now these are the 4 points given in the partnership deed, which says that what are the balances belonging to the executor of the deceased partner. But we can understand one difference here. In the previous question, in the first point itself, it was given that the capital balance of the deceased partner has to be given to the executor. But in this question, that point is not there. But please remember, even though it is not given, when you are preparing the deceased partner's capital account, the opening capital balance has to be written which is same as given in the balance sheet, that is 20,000 in this case. So this will be taken as the opening capital balance in the deceased partner's capital account. Okay, now moving forward, it is given that the executor of the deceased partner and the remaining partners agreed that rupees 5,400 should be paid to the executor immediately, and the balance in 3 yearly installments with 6% per annum interest on the outstanding balance. So after we write all these 4 items along with the opening capital, we are going to calculate what is the final balance payable to the executor of the deceased partner, out of which 5,400 will be paid to the executor immediately, and then we are going to find out what is the total remaining balance, and that will be paid in the another 3 years period, having equal installments, yearly installments. So if it is 30,000, we are going to divide it by 3 to calculate what is the yearly installment to be paid, but that will be paid along with the interest of 6% per annum. So here the requirement is to show the account of executor until it is completely paid off. So we have already discussed the working notes relating to various calculations. The first one relating to the deceased partner share in the expected profit for 4 months, and then his share in the goodwill, and also interest on capital, and one extra item, that is drawings are given. Okay, so now in the Brown's capital account, that is deceased partner's capital account, we are going to write the opening balance. By balance brought down 20,000. Then by profit and loss suspense account, the deceased partner share in the expected profit 2,000 rupees. And then for goodwill adjustment, we have written the entry here: Black's capital account data, White's capital account data to Brown's capital account. So in the Brown's capital account, we have to write by Black's capital account 15,000, by White's capital account 15,000. Then interest on capital has to be again credited to the deceased partner's capital account, which comes to 400. Then drawings is a debit item, so it should be debited to the Brown's capital account. So we get the balancing figure of 50,400. So here the agreement which has taken place between the deceased partner's executor and the remaining partners says that out of the final balance 50,400, 5,400 has to be paid to the executor immediately, and remaining amount, okay, here 50,400 minus 5,400, you will have a balance of 45,000. So the remaining balance of 45,000 will be paid in 3 yearly installments. So we have to divide it by 3. So we will have balance of 15,000. Okay. So which means that every year they are going to pay 15,000 installment along with 6% per annum interest on the outstanding balance. So let's see how to show all that calculation in the executor's account. But before that, we can show one fourth working note for the installment calculation, yearly installment calculation. Total balance which is transferred to executor's account is 50,400. The amount paid immediately is 5,400. So the balance remaining is 45,000. Yearly installment is equal to 45,000 divided by 3, which comes to 15,000. Now when we prepare the Brown's executor's account, so here the dates are very important because we need to calculate the interest. So we will write that very specifically. So here when the deceased partner died, he died on 30th April 2003. Okay, so and this balance is transferred to executor's account on the same day. So in the credit side, we are going to write 30th April 2003. Here the entries to Brown's executor's account. So in the Brown's executor's account, we have to write by Brown's capital account 50,400. That balance has been transferred from deceased partner's capital account to the executor's account. Then for the immediate payment of 5,400, it is paid on the same day. So we have to pass the entry Brown's executor's account data to bank account. The date is same, 30th April 2003, to bank account 5,400. Okay. After that, the first installment becomes due at the end of, or when that 1 year gets completed. So here he died on 30th April 2003. When that 1 year gets completed, it is on 30th April 2004. So first, before we pay the installment amount, we have to calculate what is the interest payable on the outstanding balance. So you have to write on the credit side by interest account. So on the outstanding balance, out of 50,400, 5,400 is already paid. What is the outstanding balance? 45,000. On that 6% we have to calculate for the entire year. So we are not again multiplying any months. So it is for the entire year. So we get the interest of 2700. On this particular date, that is on 30th April 2004, we are going to pay the first installment along with the interest. So to bank account, first yearly installment is 15,000 plus this interest of 2700. Total amount comes to 17,700. So we can close the entries for this year. So we get the total as 53,100 and the balance as 30,000. The same balance will be carried forward to the next year. So on the very next day, that is on 1st May 2004, we will be writing by balance brought down 30,000. Okay, then we have to check when the second year gets completed. That is on 30th April 2005, we are going to charge the interest on the outstanding balance by interest account. So here the outstanding balance is 30,000. On that we are going to charge 6%, which comes to 1,800. On the same day we need to pay the second installment money. So to bank account, 15,000 yearly installment plus 1,800 this profit. So 16,800 will be paid to the executor. Then again we are going to close the account for that year. So we will have balance of 15,000, which is carried forward to the next year. On the very next day we are going to bring down the balance 1/5/2005 by balance brought down. Then again we have to see when that third year gets completed. It is on 30th April 2006. We are going to charge the interest on the outstanding balance, that is 15,000 into 6%, which comes to 900. Then we are going to make the last installment, third installment, to bank account 15,000 plus this interest of 900, which comes to 15,900. Okay, so that is how we are going to pay the Brown's executor for 3 years along with the interest on the outstanding balance. Okay, that's it for this session. We will take a few more questions in the upcoming videos. Thank you for watching.